Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Nanjing LEADS BioLabs Co. Limited annual report. Nanjing LEADS BioLabs Co. Limited offers a diverse range of businesses and services in the biotechnology sector. At its core, the company focuses on developing novel antibody drugs for various severe diseases, including oncology and autoimmune conditions. The company's product portfolio includes several lead products such as LBL-24, LBL-34, LBL-33, and LBL-7, which are designed to target specific types of cancer. Additionally, Nanjing LEADS BioLabs is developing the LEADS Body platform, a collection of CD3 T-cell engagers that have shown promising results in preclinical and clinical studies. Furthermore, the company has also developed the XBody platform, a Forminus 1BB/PD-lone bispecific antibody that demonstrates anti-tumor efficacy and safety. Beyond its product development, Nanjing LEADS BioLabs is also involved in establishing tumor immunoassay services to support its research and development efforts. In summary, Nanjing LEADS BioLabs Co. Limited provides the following businesses and services: research and development of novel antibody drugs, commercialization of antibody therapies for oncology, autoimmune, and infectious diseases, development of the LEADS Body platform, CD3 T-cell engagers, development of the XBody platform, Forminus 1BB/PD-lone bispecific antibody, establishment of tumor immunoassay services. Nanjing LEADS BioLabs Co. Limited market capitalization of $15 billion is materially smaller than most of its industry peers of roughly $26 billion. Nanjing LEADS BioLabs Co. Limited trades at a higher price-to-book ratio of 98.21 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 60% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth for a company can be attributed to several key factors. One major contributor is upfront and near-term milestone payments from license agreements with partners such as Dianthus Therapeutics. For instance, the company received RM-100 and $77.3 million in upfront payment for LBL-47, while also securing up to $1 billion in potential deal value through an exclusive global license agreement. Additionally, the potential for tiered royalties on net sales outside of Greater China is another significant driver of revenue growth. This can range from mid-single to low double digits, providing a steady stream of income as sales increase. Furthermore, upfront payments and development milestone payments from partners also contribute to revenue growth. For example, Dianthus Therapeutics paid $25 million in upfront payment and $5 million in development milestone payment. These factors combined create a strong foundation for revenue growth, with the potential for new sources of revenue emerging in 2025 through licensing agreements. Overall, these drivers position the company for significant revenue expansion in the coming years. The company's debt level and interest expenses have undergone significant changes over the past year. In terms of debt level, current liabilities have risen by RM-100 and $3.9 million from RM-300 and $98.3 million in 2024 to RM-500 and $2.2 million in 2025. Additionally, interest-bearing bank borrowings have increased by RM-4879 from RM-100 and $55,212 in 2024 to RM-100 and $60,091 in 2025. The company's interest expenses have also seen a substantial increase. According to the financial reports, interest expenses rose by RM-1000 and $25,000, 19.1%, from RM-5,000, $404,000 in 2024 to RMB 6,000, 429,000 in 2025. Furthermore, another report indicates that interest expenses increased by RMB 1,424, 24.6%, from RMB 5764 in 2024 to RMB 7188 in 2025. These changes suggest a notable increase in the company's debt level and interest expenses over the past year. The performance of various segments and regions in the recent period has been notable. In China, significant advancements were made with 9 clinical studies across 13 solid tumor indications. This demonstrates a strong presence and growth potential in the Chinese market. In contrast, the U.S. market saw substantial recognition for its treatment of EP&EC, receiving both FDA Fast Track designation and EU Orphan Drug designation. These designations are crucial steps towards approval and indicate a high level of interest from regulatory bodies. Internationally, while specific details are not provided, there is potential for approval in various markets. This suggests that the company's treatment has garnered attention globally, with several regions showing promise for future growth. Management is optimistic about the company's outlook, aiming to establish it as a leading biopharma company with a diversified pipeline. A key focus area is LBL-24, which is expected to be submitted for its first BLA in China by 2026 and expanded across solid tumor indications. The goal is to make LBL-24 a foundational therapy in oncology. In terms of pipeline advancement, the company plans to submit IND applications for 2 new assets, LBL-76 and LBL-66, in late 2026 or early 2027. Additionally, 3 to 5 preclinical assets are expected to be advanced into the ND-enabling stage each year. This will help accelerate the development of new treatments. The company's commercialization strategy involves building an in-house team in China while partnering globally. To maintain efficiency and flexibility, it will continue to adopt an asset-light model for manufacturing and commercialization. The company's dividend policy is a notable aspect of its financial strategy. According to the provided information, the company has not paid any dividends, as per the details mentioned on page 55. This suggests that the company has chosen to retain its earnings and reinvest them in the business, rather than distributing them to shareholders through dividends. That concludes the financial summary for Nanjing LEADS BioLabs Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.